What's up guys, my name is Kevin Murray and today I'll just be talking about how to create your wealth from 0 to 100k just using basic investing principles, the stock market, and targeting people that just graduated college. If it's in your early 20s, 30s, and 40s, like this blueprint you could say could be used for anyone that has a decent amount of income or has a college degree, a trade, or even like a manager type of position. And if you want to grow your wealth in the stock market or anything in life, being financially educated or being financially literate, having assets, having passive income, and doing all that stuff, thinking like a rich dad, you could say, from Robert Kiyosaki's book. And you just gotta separate yourself from like the masses in society which aren't financially educated. I'll go extreme in this too, and really just the first thing, go from 0 to 100k. I could say 2-3 years is first just tracking your expenses and how much income is coming into your account every single month. And you could automate this. You don't have to be a spreadsheet type of guy or finance type of guy to track your expenses or income. I use an app called Peach, Budgeting Made Easy, and it automates everything for you in less than like 10 minutes. I'm not affiliated with this company at all, but it's like one of my favorite apps that I use to track my expenses and income. I'm going to keep re-emphasizing that. You just download the app if it's on Apple or Google Play and link all your accounts, because for me, like, I have a checking, savings, 3 credit card accounts, and I like my Venmo too, which some of these personal tracking apps don't have it in. This is like one of the strengths of using Peach than other apps. Like, it tracks and manages like your Venmo and Amazon daily transactions, and you could personalize everything. Like, you could create categories, budgets, and all that stuff, just to know like this specific transaction is for this specific category or expense, and you could label all that stuff, if that makes any sense. And just going back to it, like, you don't need a spreadsheet and spend hours on it. You could spend 5 minutes a day looking at it. Okay, how much money am I spending per month? And what categories am I spending the most money in? How much income am I bringing in? And it tells you, like, are you saving more than you spend? Think about it like that, because most people like to spend and don't have a concept of savings. And that's why they can't invest, or they can't pay down their credit card bills, and just you go down into like a downward spiral. And really, just the first thing, if you first like takeaway from this video is like download this app like Peach or even Mint. That's like my second favorite app. Track your expenses, know how much income comes into your account, and just save more than you spend. And for me, like, there's like many like gurus that say like save 50%. For me, like, if you want to start investing, like, put 20 to 30% of your income into retirement accounts and into your individual brokerage account. That's kind of like my thing. And you still have to enjoy your life, like, when you're young, when you don't have anything wrong with you could say, health issues or underlying issues that are going to affect your day-to-day life. You want to have personal expenses for yourself, or guilt-free spending. Like, you could spend a fixed amount of money, if it's like $1,000 or if it's $500, $600, into anything you want. If it's books, if it's for drinks, if it's for clothing, it's for shoes, like anything like that, because you want to enjoy yourself, or you want to save something for traveling. And after that, just knowing the concept of how much you're spending and how much expenses and income. I'll be talking about like the United States personal savings rate, and we could see like the average savings rate in the United States historically has been around 5%. And we see this big uptrend here when the stimulus came, when for the first time, when most Americans had some savings, and number two, when the economy was quote unquote shut down, when people weren't spending money, their income levels or savings rates was over like 30%. And what were people doing with that money? And if you look at that time, how the crypto market and the stock market were booming, or were red hot, you could say, or even bubble territory. That's where most people were spending their money. You couldn't gamble, so people were gambling in the markets or crypto. And there were investors too, but most people were just in that short-term mindset. Why do most Americans have a general savings rate of only 5%? Like, most of them aren't tracking their expenses or income, and they really don't know what financially education means, or being financially literate, being honest. And look at this article from NerdWallet. The average net worth by age. You could look at this chart and look. The average net worth of individuals less than 35, $76,300. Between 35 and 44, $436,200. And if you look at it, I'll link it down below. Like, these are the average net worth for Americans, and it's good and all, but you could do more. Like, you don't have to be in this bracket if you just start investing when you're young. I'm just trying to make it more aware for people. And this is like one of my favorite books that I started my personal development journey. Summing up this like chart, in like 30 seconds is like, these are this chart is just for the average American that isn't financially educated. They have maybe have a 401k, maybe they have Social Security, maybe they have a little pension, and maybe they have a Roth or traditional IRA, and they probably started like when they were in their mid-20s or even late 30s or 40s, and a lot of people listening to this could do more with it. Going to this article, if you just read these concepts from like 1 to 7, it just gives you just basic principles how to live a rich dad mindset. I want to have asset producing incomes. I want to have passive income. I don't want to be having liabilities, saving more than I spend. I want to be growing my wealth using the stock market, the real estate market, possibly crypto, or just owning a business that produces you cash flow. Very basic principles. And one of the last things is like, I'm just going to do the compounding calculator and see like, this is like not fake and stuff. Like, you could create wealth using the stock market. The first thing I'll do is like, my initial investment is $1,000. Monthly contribution, let's start with $3,000. If you have a full-time job, I think it's reasonable to be doing that if you're tracking your expenses. Length of time in years 3. Estimated interest rate. Stock market has historically returned 10%. And already did it. And it's $120,000. And we could play around with it. Like, that's why I like emphasized in the beginning, like, you should be safe. You should be tracking your expenses using like a personal finance app or the apps I used that I recommended before in the video. And number 2 is like getting your income right first. Okay, when you get your bachelor's, you finish trade school, or if you're in a managerial type of position, you're making a decent amount of money. I should be putting maybe, I said 15, 20, 25% into the stock market every single month if you want to. That's my recommendation, not a financial advisor, but it's like very cool how it works. Like, maybe you just want to do $1,000 per month and $1,000 initial investment. I mean, it's $41,000, and this is how much you put in. It might be not a lot, but it's something. Or we do 2,000 and see how it grows, but this is like a 3-year time horizon. You could say my video was like how to get 0 to 100k, and this is how you do it. When you get your income right, I'll mix it up a little bit and like do it. Initial investment is 1,000, monthly contribution is 2,000, length of time of years, and estimated interest rate is 10 years. Calculate it, and you get $3.9 million. It's like mind-boggling, right? And we saw the average net worth of individuals here and compare it to here. So what you have to do is like invest into an index fund every single month, cost averaging up. Ticker symbols VOO or SPY or VTI. These indexes do what the market does, historically 10%. Some years are up, some years are down, but average is 10%. If you want to account for inflation, it's 8%. Kind of shows like you should be investing because inflation devalues your dollar every single year, and you want to be investing. And what drives the market like in the long term is underlying fundamentals of companies, big tech, U.S. economy, consumer spending. There's many catalysts, but you have to just get into that mindset. Investing into an index fund, it's just so simple. Basic principles of how to grow your wealth in the stock market and become like a multi-millionaire by the time you retire. But thank you for watching, and peace out.